Morning and welcome everyone. I'm really happy to have Mark Williams from Vendigo here today to talk about consumer finance. It's becoming obviously massive in the world, not just in kitchens, obviously huge in the car industry, but it's come into the kitchen, bedroom, bathroom industry quite widely through, more often than not, through Ren, who do about 85% of their business through finance now. When you take it, they're doing 400 to 500 million. That's a massive amount of customers looking for finance. So we wanted to give you a few tools today. Mark's going to talk through the options available and to give you some highlights of what you can do in your business. And probably get rid of some of the false or the thoughts out there that aren't probably true, and get you over the hurdle. Obviously, we can send questions afterwards as well, and if you've got anything you want to ask, or there's something personal you want to go to afterwards, obviously Mark will be available, and at the end there'll be a Q&A. So without further ado, I'll pass you over to Mark for this chat.
Okay, super job. Thanks, Richard, for the introduction. Well, good morning, everyone. It's great to meet you. I'm going to go into screen share mode now to bring some slides up onto the screens in front of you. So just bear with me one moment while I switch from my camera into presentation mode, and then we'll crack on. So I'll just do a little introduction about myself and the business. First question is, can you guys see my screen? Just a quick thumbs up from yourselves, if that's okay. And can you see the slides is more critical at this juncture. So is that okay? So you can all see the front screen and you can't see my face so much anymore. Is that all right? Good. Okay, let me crack on. So we're doing an introduction to Vendigo, who we are, a little background on our business and where we've come from. So Vendigo's been running a number of years now. We are, as you might often hear referred to businesses as fintechs. So we're very much a technology-led business. We've had significant investment into the business over a number of years to build a platform which works across multiple sectors, across retail. But predominantly our focus for a number of years has been in the home improvement space. You know, we feel as though the technology lends itself very well to that environment, and into which we work with a panel of lenders, and a panel of lenders which is growing consistently and steadily over the next several quarters. The lenders that are on our panel currently serve purposes of as a tier one provider, prime lender. We've also got lenders that will support what we call a tier two or even a tier three journey. So for customers who may not be accepted by a tier one lender, then we have other lenders have a broader risk appetite to support those customers. Okay, so just looking at and facing into some of the challenges and the reason for using retail finance. We look at this from different perspectives in terms of what finance can do. And of course, I don't know across the attendees here today as to which businesses have used finance historically. It might be something that if we go back long enough to the days of consumer credit licenses that were given out by the Office of Fair Trading, were arguably a little bit easier and it was a softer process. The FCA came more into the fore in more recent times. From a regulatory perspective, very much focused on consumer protections and stronger regulation around the entire financial service industries. And we saw, and I've been in the industry in retail finance for approaching 25 years, but we saw there was a bit of an exodus, if you like, from the market, businesses that had consumer credit licenses but opted not to go down the Financial Conduct Authority route. But I think what is, and as Richard alluded to, what's remains true to this day is what finance does bring to businesses in terms of a competitive edge. We know that it increases average order values. It takes away some of the sensitivity, feasibly around the price and the costs. It will improve conversion rates. Customers are more inclined in using finance to not just spend more, but to choose a business because they've got financial products available to them. So in doing so, you're going to see that you will gain incremental sales. If you imagine there's a scenario whereby like-for-like businesses have financial services products available to them, then what it won't do is it won't deter a customer from going to a business that offers finance if they've got every intentions of funding it through their own means, whether they've got savings to draw upon, whether they've got investments that they can draw down, whether they've remortgaged feasibly or raised funds through a further advance. So more broadly speaking, it's for us, it's very much around having as many tools at your disposal as possible, being able to give customers access to funding through unsecured and feasibly secured sources as well. And I'll come on to that in a moment if I can. So in terms of considerations, now going back to, I think, and I've attended and found them really valuable to have attended some KBSA meetings of late, and I've spoken to a lot of members subsequently, and one of the real considerations, and I think to a degree a barrier to entry in the kitchens and the bathrooms and bedroom space, has been the way which traditional retail finance lenders pay out, and how that aligns or potentially feasibly doesn't align to the way that your businesses get paid. So as I've seen and as I've learned more recently from speaking to other KBSA members, is one of the challenges, and perhaps the barrier to entry that I alluded to, is the way that you currently get paid. As in, you will typically take a deposit up front at the point of order of anywhere between, let's say, 20 to 40%, and then take a more significant payment from the customer when the products have been manufactured and are either delivered or ready for delivery, with potentially a final payment after installation, so with a lag of perhaps between 2 and 4 weeks. The challenge that lenders have faced, and the way that a traditional retail finance lender pays out, is they would pay upon completion, i.e. installation, which is therefore out of sync with the way that you would normally get paid by customers. And that, I understand and appreciate, can be a barrier to entry. Is it just a challenge from a cash flow perspective? Your business has been built on building strong reputations in and around your locality for many, many years, and customers are sourcing funds and quite often coming to you with the funds kind of ready, and therefore are there and able to pay you when you want to get paid, when your suppliers therefore need to get paid. And there have been other concerns voiced in terms of what in the scenario if we were using retail finance and the customer at the end of the process opts not to sign off on the installation. And it could be, and I understand this could be for something as relatively trivial as a scratch to a door that was unforeseen, or a door handle that needs replacing. And there have been concerns voiced around that, and we've taken that on board, and we understand that. So what we've looked to do is, in talking to and having dialogue with lenders, is looking to present a solution which we think should alleviate that pain, that sort of challenge around the cash flow. So in terms of the credit products, you would have seen, and we're fully aware of what the likes of Ren are doing in the industry, and other businesses, other lenders are in that space, and there's a lot of talk around, well, do we look at interest-free credit? Do we look at interest-bearing products? If you imagine in very sort of crude, simple terms that in interest-free credit, the business, the retailer, the installer takes on board the full cost burden of that credit product. If you imagine a sliding scale, as you introduce an APR and as the APR incrementally increases, then the cost of credit to you as a business will reduce. So what we would look to do is, in working with businesses, is to create a portfolio, a suite of products which meets the needs of their demographic, of their customers, but also meets the business's needs in terms of impact on your business, your margins. So we would look to bespoke something for KBSA members. We've got full awareness of, we understand the demographic of customer. We understand that as a pure homeowner base looking to spend anything from 15 to 20,000 pounds all the way up to 100,000 pounds or more. There's a broad spread there, but generally speaking, businesses like yours, higher end customers, stronger demographics, we would expect a very high conversion rate in terms of acceptance rates from tier one lenders in that environment. Other things that we would look to do naturally, as one would expect, is to offer full training and support and operational backup, especially for those businesses who haven't been offering finance for a while. There are regulations, as you're all fully aware, with the FCA around financial services and the offering of credit products. So it's critical, we think, to offer that additional support and the training to make sure that everything is done in a compliant manner. We can support with additional tools to present credit in the right way in terms of advertising, whether that be on website pages or so on, or in store even. From a regulatory perspective, we have different models available. So for businesses that already have their own FCA permissions, we can offer facilities to them to come on board and to offer finance pretty much from day one. For businesses that don't have their current FCA permissions in place, then what Vendigo are able to do is appoint those businesses to our own license to enable them to offer finance to their customers as if they were FCA authorised in their own right, but without having to go through the rather onerous process, it's probably fair to say, to get on board with the FCA. Typically, we're seeing that to get a full permissions license with the FCA can take anything from 6, even up to as long as 12 months we've seen historically. We find that we can onboard retailers to our license in much less time than that. So that's something we feel gives us a certain edge in this environment. So we've got a broad range, extremely broad range of lenders. We've got market leading technology. So at the point of sale, you can, in dialogue with the customer, either start the process off and ask the customer to take that on, with you present. Equally, we've got solutions whereby it's as simple as sending a short email link to the customer or text link, and they can self-fulfill and complete the application themselves. It's a process that takes 2 to 3 minutes for a customer, and we feel that in putting the application straight into the hands of the customer, some of those more, let's say, awkward questions that might need to be asked, as in income-based questions, for example, some of the more sensitive questions that need asking, put it straight into the hands of the customer is what we would thoroughly recommend. So we can give a broad range of credit products to suit your business and your customers. We can give the full regulatory support that's required with technology. The products, coming back to the products in the first point that I alluded to, is we've got a lending solution we're looking to bring to the market within the next week or two. We've got a lender on board that's now comfortable in this environment with, rather than waiting until installation and the signing of satisfaction notes, we've got the commitment from a lender whereby they will settle the credit balance to the installer, to the retailer, at the point that goods are manufactured and ready for delivery. So we feel as though that ticks a big box in terms of overcoming one of the potential barriers to entry in this environment. It's unique to us at the moment. We've got the partnership agreed. We've got a very strong relationship with KBSA, and we're looking to ring fence this and launch this particular product, this solution, into the marketplace with KBSA members. So in terms of the implementation piece and what we can do. So just to recap, so we can support businesses from a regulatory perspective. We can onboard business to our own license, and we can have you approved and up and ready and trading within, we think, 30 days comfortably. We can set within your business, depending on the size and scale of your operations, we can allow and configure system access controls in a hierarchical manner. So individuals, a salesperson, for example, can be given a basic level of access, whereas senior management, directors and so on may require a more holistic view and require a high level of access. We can set that to be configurable, to suit the needs of your own businesses and what you're looking for. I touched upon the point in terms of how you can present finance. We've got payment calculators to use there and then. We've got online widgets, as they're called, to enable you to present finance on your website where appropriate, to allow a customer essentially to kind of play around a little bit and configure the figures for themselves and work out what they think a budget could look like. So it might be they can even come into your showrooms already having looked at what might be available to them. And then that helps you and them to drive that conversation further forward. And there is in the background a full reporting suite. So you've got access to decisioning, you've got access to general performance in terms of your average order values on finance, so you can track payments also, and you can look at general reporting and trending and seasonality as finance starts to build for you. In terms of settlement, we would look to settle within 2 or 3 days of that confirmation around the order being at the point of manufacture and therefore ready for delivery. So on that basis, shouldn't be looking at something which, as I mentioned, alluded to, affects cash flow in a negative manner at all. We will get paid, the funds paid to you within a day or two of that confirmation note coming across. In terms of how we would go about onboarding, relatively straightforward. It's a matter of selecting the products which you would like to offer your customer. There's an application process with the FCA for us to work through together. We would need some information drawn down, proof of ID typically, and there's an expectation around having a DBS check done before we appoint an approved person to our license. So then we'll work through the lender and the Vendigo due diligence. We'll apply to the FCA and add you to our license. And then, as I mentioned, within about 4 weeks, we could have you up and running and serving customers with finance. In the background, one of the things that we need to do to retain our own FCA reporting and keeping things in line, we need to report on each and every business we appoint to our license. So in the background, we might put in the occasional care call to customers to make sure they're comfortable and happy with their goods and services. And that feeds into the reporting that we ourselves would need to do to feed into the FCA on a quarterly basis. So I'll move through that at reasonable pace, I think. Over to you, ladies and gents. Are there any questions on that that we'd like to kick off with? I can see a hand up emoji icon from Joe Varley. So I don't know, Joe, if there's anything you want to kick off with on that one. Oh, I can see. Sorry.
Yeah, can you hear me then?
Yes. Hi, Joe.
Hi. Yeah, basically, obviously the world we live in at the moment with the way customers can be. I mean, the worrying part is like holding back the last payment, or how would that work again?
Right. Okay. So yeah, just to recap on that one, Joe. So the process works whereby the customer would apply for finance at the point of order. So, and I'll make some assumptions on values, for example. So imagine a 30,000 order, and you might take, let's say, a 30% deposit, 9,000, leaving another 21 to finance over perhaps, let's say, 10 years. So the finance would be approved at the point of sale. So at that point, you know the customer has got their finance in place. Traditional models work whereby you would have to complete the entire installation in order to get funded. The model which we've got approved for with our prime lender is one whereby you can trigger payment and you can request payment at the point the goods have been manufactured and therefore are ready, or at the point of delivery into the customer. From that point, as I understand, it would be typical, therefore, for there to be a further delay whereby installation takes place. So typically from that point, it's, let's say, 2 to 4 weeks for the installation to be completed. So that's the model. This is the real shift in the model whereby we'll be looking to pay you as you would normally get paid today with a traditionally, let's say, cash paying customer. Typically, as I understand, you would get a deposit up front, then a significant payment of between, so 50, 60, maybe 70% at the point the goods are ready to be installed. And in some cases, it might be a token payment at final installation, or it might be, let's say, 10% or so. So what we're really saying is that funds can be triggered. We can get you guys paid out at the point where you normally get paid out today when goods are manufactured and ready for installation. Does that help, Joe? Does that answer the question okay?
Yeah, thank you.
Excellent. Okay. So I'm seeing some other questions. Let me just pop open the chat. I can see a couple of questions coming in down the side there. Okay, so cost of service. It's a good question, fair question, David. So for any businesses that we were on board to our license, we do incur costs with the FCA. So there is an onboarding fee for KBSA members at the point that we would put you onto our license. And then that figure is £295 for KBSA members, which has been reduced from traditionally or typically £495. So we'll reduce that to KBSA members. And then we have a 12-month management fee. So every single month there is a smaller fee payable by members to service our costs to the FCA to cover operational costs and so on and so forth, but also towards mitigating any risks in the background that are present when we are working as a principal with businesses appointed to our license. So yes, there are costs attributed to this. The only other cost beyond that will relate to the actual financial products themselves. So I mentioned the APRs and the choices of APRs, and that's where we would work individually with yourselves to ensure that whatever financial services products are available would be tailored to meet the individual needs of your business. So the question there I can see from Liz. Worked like this in the past, been able to pay this. Right. Okay, so in terms of the big cost there, Liz, if by that you mean interest-free credit, then interest-free credit typically will cost anything from between around about 8% and upwards of 20% plus, depending on the loan term. So we don't see that interest-free credit necessarily is the right product for this environment. I think for businesses, and Richard mentioned Ren right at the start of the call, Ren are a completely different environment, completely different business model, akin to DFS, where manufacturing their own products, they've already built in and absorb the costs of interest-free finance. So as I often talk about with KBSM members, that for somebody buying a £10,000 kitchen, £2,000 or even upwards of £2,000 of that essentially is attributed to pay for the cost of the interest-free finance that they've got in place with their lending partners. So we're really looking more towards I'd say a subsidised interest rate, an interest-bearing rate, which is more in line with what a customer might get from from their bank, perhaps. In terms of the points around, I think there's a question there again. How is this more beneficial than a home loan? Okay, so it's a fair point, and what I go as far as saying there's two things there, is that this will not necessarily be for everybody. These are typically unsecured advances where the customer can choose payment terms for anything from 12 months to 180 months, for example. It's lending that could be turned around within minutes, doesn't have any impact on the equity they've got in the property. So yes, excuse me, we do acknowledge that, and I've done this myself, we do acknowledge that traditional customers who are buying from you currently, will have arranged their funding feasibly in the background. So they will have been to their bank, their mortgage company, they will have been to potentially a secured loan provider, and so on and so forth. So in that scenario, I guess what I'm not saying is this is not necessarily something for everybody. This is a financial services offering to enhance what you've currently got, to make your products, your goods and services available to a broader suite of customers. To those customers that currently perhaps don't come in today, might even walk straight past because they don't see that there's finance available. Now, what we're not saying is that we would expect to see credit penetration, finance volumes, increase or incur sort of penetration levels of 50, 60, 70%. This is not necessarily for everybody. We acknowledge that all you guys have been trading for many years and you've built extremely strong, successful businesses without perhaps using finance. But what we are seeing is the marketplace there's a growing awareness around finance. And maybe it's the likes of Ren that have kind of started this awareness piece off as the marketplace, shifts and evolve. But when I look at also businesses, the likes of the Cutchin House, for example, John Lewis of Hungerford, businesses that also offer financial services products to customers. What it does for those aspirational customers who would really love one of your kitchens, but feels as though it's perhaps outside of their range, outside of their budget. If they don't see finance being offered, they won't ask for something that's not there. If there is finance available, it may well then trigger some of these customers to come in to visit your businesses and to talk to you about getting the product that they really, you have to excuse me a moment. Yeah, it's about very much then getting the product that they really want as opposed to the product that they think they can feasibly afford. But as I said, this is very much not a one size fits all. This is offering additional payment solutions to enhance what's already available to customers. So absolutely, yeah, customers will go to a mortgage company, will look to which can take a number of weeks to get past. They will do all of these things. This is about enhancing the payment solutions that you've currently got and offering something a little bit different to make products more attainable and achievable, or to encourage customers maybe to spend a little bit more. Customer who might have a budget of, let's say, in their own mind of 20,000, finance might push them to 30,000 or even more. Many customers are, as we refer to these days, as being investment rich, cash poor businesses, customers rather, who've got money and assets, they're tied up in a certain environment. If they can keep them in that environment, in their ISAs and so on and so forth, they may wish to do that. So there is absolutely a demographic of customer who is more inclined towards using finance that's available rather than dipping into savings, investments, or even go to their mortgage company for a further advance, as on occasions happens. So Liz, another question there, even with a 5.9, a low rate like that would most likely come with a subsidy. Buy now, pay later is a product that we are looking at, and it's something I think that will become available. So for those who don't know, buy now, pay later it's a term actually that's quite often used these days to refer to what we've all probably seen online through the likes of Klarna. Now, as an industry wizened sort of veteran, if you like, when I think buy now, pay later, I think of the products that I think you're referring to there, Liz, which is customer can spend today, but there's a payment deferral period. So the payment perhaps is deferred by maybe 6 months or 9 months or 12. It is something we're looking at. Now, with those customers, there would be a subsidy attached to it, because you will probably find that customers will use buy now, pay later with every intention of paying it off when they get that reminder come through 6 or 9 months down the line. So traditionally and typically, most customers will pay that agreement off. If they don't, it rolls into generally a 5 or a 10-year loan product at anywhere between sort of 9 and 14%, something along those lines. So I hope that answers that particular question, Liz. It is absolutely something that we can look to take on board and take away separately. We are in discussions with lenders at the moment on buy now, pay later. It's a product that's gained traction historically. but lenders now tend to price it rather more closely to interest-free credit than they do interest-bearing. Main reason being is most customers pay it off, so therefore, as you could imagine, there's no interest income for the lenders, and therefore it tends to come at a cost. But it is absolutely a product that they're in the industry, and so on and so forth. Okay, maximum deposit in is 50%. So yeah, 50% deposit up front. And I think, or I believe anyway, that typical deposits in your environment, your space, are around about 25 to 30%. So we're very much in line with that. But you could take, if you wish, to deposit of up to 50%. A document with all the figures and rates within. Yes, David, we can provide, and I will absolutely follow up off the back of this, either individually or through the KBSA. I'll pick the conversation up perhaps with Hannah. Is absolutely, we can provide all the information you require on the nature of the credit products, what's available, give some indicative examples on subsidies and APRs, and so on and so forth. No issues with that at all. Loan values, Liz, typically up to 35,000, we can go. So there is a loan solution, another product I perhaps should mention as well at this juncture. It is going back on a point I made, a question that was raised, I think, by you as well, is on mortgage companies and so on. We've got a relationship with another lender that operates a home equity release product. Essentially, what they do is it's a secured product, but they're very much a fintech like ourselves. They're a lender that can turn around a decision and an application and pay the funds out to a customer within, we've seen them turn around within 48 hours. Now, traditionally, mortgage companies, secured loan providers and so on generally take a number of weeks to turn around an application and get the funds paid out. The absolute beauty of this particular product, the benefit of this product, is it's a drawdown facility. So the customer could apply for funding of up to £500,000 for an entire project, and they draw down the funds as and when they need them. So to use that typical analogy of, you guys would capture a deposit up front normally today, take a payment at the point of installation, and then a final payment when the installation is completed. A customer could draw down the funds at those points. The real advantage is then they're only making payments and interest on the amount that they've actually drawn down. So it's a very flexible solution. It enables higher spending customers. And I talked earlier on about knowing that, I've seen some of your amazing kitchens that are, pushing towards £100,000 or so. So a customer that's looking at an entire project, it may be that project type funding, a solution such as this, whereby they could get funding for the entire 100,000 and also more besides. So if they were looking at other parts of a complete home improvement project, and it might be that it's something that's scheduled over 6 months or more, they can arrange a drawdown facility today, have the funds allocated and ready to draw down as and when they need them. So unlike a mortgage or a similar payment vehicle, where all the funds would be transferred across from day one and they're making payments and interest on that, this enables them to draw down as and when they require, with APRs that are very much in line with what a typical secured loan or mortgage provider would provide. And these are very much aimed towards higher spending, high demographic type customers, i.e. more of your type of customers, we think. So that's an additional product that we've got available that sits beyond the retail finance products that I talked about earlier. The fundamental difference is, of course, with our retail finance products, you get paid the funds at the point of confirmation of delivery or manufacturer. With the secured loan product, the customer gets the funds themselves, and then they make payments to you directly, as they would do today anyway. Ian, commissions. Short answer is no, we don't pay commissions. I think more broadly in the industry, and I guess prime example right now today is that we've all seen what's going on in the motor industry. So where we are and where the industry really sits is there's more comfort in moving towards a lower APR for the customer than introducing higher APRs whereby lenders then pay commissions. We've all seen it. I've certainly seen it over many years more historically, primarily in the glazing sector, where significantly high commissions were being paid out to businesses on financial services products. We're very much in the space now as a lending industry whereby we're looking to drive the APRs down to a point where we can get to cost neutral. So there are funding solutions we've got which would cost you nothing. What we don't do is we don't go beyond cost neutral. So there wouldn't be commissions paid, but we could certainly get to a point where cost neutrality would come into play in that respect. Next steps, Lizzie, is I'll work in the background with Hannah and do some follow-up communications to all of you guys. I'm happy to pick up directly on the dialogue. My contact details are available through the KBSA. I think the details are on the website. So I'm absolutely more than happy to follow up off the back of this. Whether we set up individual conversations, meetings, no problems at all with that. I can follow up and send information out directly to email. It's something I'll pick up with Hannah. It might be that we can do, perhaps we can set up, Hannah, a group comms of some sort. I'll pick up with you in whichever way you think is fit and appropriate, Lizzie, in that respect. So yeah, we'll make sure the contact details are there. It's quite simple. It's mark.williams@vendigo.com. So just another question there. I've seen come in, Woodlands at Hertford's, as Charles. Finance available to clients who require supply only. Yes. Supply only actually very much sort of fits in rather neatly with what we do or have done for many years. So yes, it is possible that we could set in place a supply only arrangement for customers if they're arranging their own installation in the background. I wouldn't like to guess as to how often that sort of you come across that as a potential scenario, but it's absolutely possible. So yes, we can support that type of model with a supply only type arrangement. Any more questions from any of you guys? I'm hoping that I've managed to cover off most of the information, and I'm hoping that the follow-up will be, there'll be plenty of it. I think that, I think what we're doing is at the moment, we see it as something quite unique in the industry. I've talked to many KBSA members, as I said right at the start. I've talked to many of you guys, met you at KBSA events, spoken to other guys like Richard, Luke, Malcolm, and Hannah and co. And we feel as though we've got a really good relationship with the KBSA. We feel as though we've now got a product which meets the kind of requirements and hopefully alleviate some of the fears or concerns that you guys might have about payment terms and so on. It's very much about, can we find the right products? And I think we can, because we've got a full suite available. We can tailor a solution that meets the needs of your individual businesses. So I'd be absolutely more than happy to follow up with each and every one of you directly if needs be, and provide some indicative terms and rates so you can see more broadly what it looks like. So I'll certainly be picking that up with Hannah in the background, and we'll work out how we can best approach this. And it might be, if you guys are comfortable, we could do certainly a document or something, a brief, which will give you an indication as to what some of the products look like. And it will give you, I think, a flavour. All I'd say is beyond that, we would work individually and do something bespoke for you. There's not a one-size-fits-all approach to this. We're very much looking towards a bespoke arrangement with businesses that meet their individual needs and requirements. So I'll look to pick that up with Hannah and the KBSA team in the background, and we'll try and get something pulled together and communicate that within the next sort of day or so, I'd imagine. So yes, yeah. So Carl, absolutely, Lizzie, rates, terms, APRs. To give an initial flavour, we start with interest free, and we probably go up about as high as maybe 11.9 or 12.9. We don't tend to go much beyond that. Not certainly not in your space and your environment. So that's pretty much where we would be. So I can provide in the background some indicative rates based on 2 or 3 options, just to give you a flavour and a feel as to what's available. I think it's already been highlighted in the chat in terms of the upper spend limits and so on and so forth. And Joe, yeah, just on that point, documents to show how it all works. Yes, we can certainly provide some documentation in the background, screenshots, that kind of thing, which will give you a flavour, a feel for how this works. And perhaps it might be something that we'll do on a future webinar, is maybe to set it up and do an actual screen presentation as well. But we can certainly provide information and screen grabs, give you an idea as to how this all knits together and how it flows for you. Thank you as well, David. So if there are any more questions, my direct email is there. So by all means, anything you want to take offline, ping me a note and I'll get straight back to you. But otherwise, guys, I guess in the absence of more questions, then thank you very much. My first webinar, I hope it's gone well for you guys. I hope you got a lot of information out of it, and hopefully I'll talk to all of you at some point in the not too distant future. But thank you all once again, really appreciate it, and have a fantastic day.